Hello everyone again. This is the third part of the video, and now we're gonna get to the meat and potatoes of that, and what exactly, how exactly to treat that Amazon split, since this can really be a great thing in the future. So what we're gonna do right now is talk about the in the last two videos we've talked about the major support and resistance areas, um, whether it is like the on the long run, what we have, and now we're going to be talking about how do you trade this, how do you work this out. So I have here three scenarios where you can trade the Amazon split in an uncertain market like the one that we're dealing with right now. We have everything um, going down so far, except for inflation, of course, keeps going up. So, but housing market keep going down, and prices keep going up, gas keep going up. So inflation is really scary right now, and people are so um, really worried about what's going on and things like that. So what do we have here? What do we like? How do we trade this in the immediate term? Like what we have here. We want to look at this right here, this part right here, this area where we at right now. This is like you are here on the map. What happened with the stock is that on 13, it made its lowest right here, and that was 101. And then it came back and tested the same area, which a beautiful double bottom on a stock like Amazon. If you have a double bottom, you buy right away. And then it came to this resistance and it halted. And a lot of people who bought here, a lot of people who bought here and got stuck because the stock gapped down on them. They were waiting for a chance to get rid of the stock at this point right here, and they did, and that built our next immediate resistance area, and then the stock gaps down again, and then now we're waiting for the next move. So what I do here, like how do I trade this? If you are a long-term trader, if you're going to be holding the stock for about 4 or 5 years, then you don't worry about any of these things. You buy the stock now, or you buy the stock at a major support, or you just like buy right here and just leave it until, like, for 2-3 years this stock is going to be at least $300-400. Amazon is not going anywhere, and it just keeps growing and growing and getting better and better because people can the convenience of buying things from home, especially when Amazon starts to introduce their own coin and start to introduce their own like digital asset. Things will be different then. But for now, let's focus on what do we do here. So how do we trade this? First of all, we determine our support and resistance area. This is our double bottom. If it hits again and it gets to the triple bottom, this is what really a lot of people are going to be interested in, because third time is a charm. If it hits the third time, that means a lot of people are going to actually buy at this support. And support and resistance traders are going to be waiting down right here at 102, 103, 104, around this area. Every gap has to be filled. So not every gap, sorry about that, but a lot of the gaps are filled. So if you look here into this gap right here, this gap is going to be filled. So that's about 116. Every gap down acts as a resistance. So this right here is a major resistance, like 115 is a major resistance. If we break through this, we will have our next target, which is like the 124 there. So again, if you are a support and resistance trader, which he waits until like this point right here, you would wait and buy around here. If you are a Fibonacci trader, here we go. So we are Fibonacci traders. We would use Fibonacci from the immediate bottom right here, and then we're going to go into that top right here. We'll just analyze this small tiny area right there. You would wait until this area right here, 107, around 107, around this area, 108, which is where the stock is right now, or you wait until you get to the zero line, which is right here. Did I do this correctly? This is okay. So this is for the immediate trend right here, for what happened from here to here. Usually I do it on the closing, which is way better. So right now we came and touched exactly this point right here, where we touched the 23 level. It's usually not a major level or anything. If the stock usually get to 23 level, it usually gets to zero level right here, which is your triple bottom. And this is where a lot of people are going to put the trades and aim for at least 124. And why I'm saying that, because we are coming into a earning in July 22. So this is something that everybody going to be looking forward to. Amazon earning in here. So this is if you are a Fibonacci trader. If you are a trend trader, so what are you going to be doing? You're going to be looking at another touch on this line. So you're going to build a trend. If we put our regression channel in this area, we're going to actually see, we're going to actually see that we're going to actually see that we are in an uptrend. And how do we know that? Is our regression trend. We're going to take it from here to here, and we'll see exactly what situation here. Oh, look at that. We are an uptrend and we're touching the bottom of the regression channel. Usually when you touch the bottom of the regression channel, what happens is you just go back up. So if you are a trend trader, you will wait until it hits another major resistance, which is right here, and it comes down to this point, and that will be a confirmation around the 114 level. But you also have a gap down here, which acts as a resistance. So you really have to be patient to get to follow your rules, because as we know, different traders have different rules, and we don't just jump into trades. What we do is, if you are a trend trader, if you are a support and resistance trader, if you're a Fibonacci trader, all of these traders, all these kind of traders, they have their own method, and this is how you make money in the market. You don't just jump into trades. You have to follow your rules, and we don't make money of the stock going up and down in the market. On the long run, we make money of following our style and following our rules. We don't care what else is happening in the market, as long as our setup is correct. Our setup is the bread and butter for what we do. We do not jump into trades. We just follow exactly the setup that we learn, and this is how you make the money. You don't make the money again by jumping into trades. What you do, you have a setup, you have a style of trading, whether you're a day trader, swing trader, whatever kind of trading that suits you, based on how much money you have in your account. What you do is that you do not jump into trades. You have a setup, and that setup, you wait for it until it happens, and then you go in and execute. Your job is to execute your setup. Okay, that being said, regression channel, you are at the bottom of the regression channel. So what I think, if the market goes very well on Monday, what happens is this is gonna go back a little bit up. If not, if the market have some bad news, we're expecting that it will come down a little bit more. Maybe we will have to adjust our trend line a little bit down if this happens, and we will have a trend line that will be around here. If it goes down a little bit more to, let's say, 106, 105, around this area. So if you're not a trendy trader, if you're not a Fibonacci trader, if you're not a support and resistance trader, what are you? Let's see. Now, I am let's say, if you're a day trader now, what you're gonna have to wait for is some kind of price action that will happen here. A price action that will happen here, which is from this to this. What do we call this? We call it like a cow hold. That the right term for it. And what does that mean? It's close above the high of a low day or something like that. Low day, yeah. So if you are a trend trader, what you're going to look for is a close above this. So as you see, like this is when people, when do people enter the trade aggressively is when something like this happened. You get, this is a low day and suddenly you have a close above the low day right here, because this is your first close above the low day. This is, let's say this is a low day right here. This is the low day right here. This is the close above the low day. And this is what happened exactly right there. And boom, suddenly you have a pivot point right there, because this is the close above the high day, close above the low day. And then right there, right now, a lot of people got entered into the stock based on pivot point. These are also pivot point traders, different kind of traders, but they enter here and then they go up here with it. It built another pivot point, built another pivot point, built, and now we have a close below the low of the high day, which is right here. And this is where we get out of the trade. If you're a day trader, you got a close below the high of a high day. This is a cup hold. This is close below the high of a low day. This is different method if you're going down like this. All right, so this is on the daily. On the 4 hours, you're getting your support and resistance line from the daily. You wait until support happens, and then you ride the stock from here, 103, all the way to up to 124, 125. You get out. How do we get out? It's very simple. You take one of the trend lines, you draw a trend line that connects 3 or 4 of these things, and once your trend line is broken, right here, this is where you get out. Okay, so if you got it in here, you wait for the next candle, the next candle, the next candle, and then those candles, once you are, if you're aggressive, you will do that. But if you're not aggressive trader, you will just build a trend line like that. This is trend line trading. And once that trend line is broken right here, this is where you get out. If you don't get out here, wait for a double top, which is right here. But when your trend line happens to justify it is a resistance line, and at this resistance you have a double top and you still don't get out, that's a really big problem, because you also have the pivot point right here. That pivot point is actually happen to be in the same area. So you have a lot of confirmation, you have a lot of confidences, like they say. What is the first thing is a trend that is at a major resistance, a broken trend line, a double top around this area, a pivot point that tells you that this is a high, a close below the high of the the low of the high day right here. If you have all these things screaming at you and telling you to get out of the stock and you still don't get out, that's really your problem. You want to leave all the money that you made. But anyway, why are we here? We're here because we want to tell you how to trade this split right here. So what we do is I put 3 methods here that will show us how to trade that. First one is, why not just get paid to buy the stock? And how do I do that? How do I get paid to buy the stock? What I get paid to the stock is that I'm going to offer someone to carry his risk at 103, because I know 103 is a very, very strong support right here. I'm going to sell a 103 put. What does that mean? Say, okay, you pay me $500, $5, $6, and it comes out to be $500 or $600, and I will carry your risk from here and from 103. So no matter what happens to the stock, if the stock goes down to 103, I will buy your stocks for 103 right there. So let's say he paid me $5 for that. So my risk right now is 96 or 97. So if the stock goes down to 97, if I get paid $600 for that, the stock goes down to 97 or something, that means I'm right now in the money as far as the premium that he paid me and the price of the stock that I wanted to buy it at, which is 103. So it's a win-win relationship because I got the stock for $96 instead of paying like 103 or paying even 110 right now. But that thing needs patience and things like that, and we can build those puts over time. So if I buy a put at 103 and then it gaps down on me to 96 or 97, now I'm in the red, yes, but I can average down on Amazon. I don't really recommend averaging down, but I know that when I average down on Amazon, I'm in a winner stock. And then I buy another or still another put at 96. That's going to be, if the price goes down all the way to 91, that's also going to be my way of averaging down, is getting paid to average down, getting paid to buy the stock at this point. So I see the stock reverses and everything. Now I'm making money out of my puts, and at the same time, I want to start buying, accumulating shares. So I'll leave the puts to work, and also I'm gonna start buying, shares, 10 or 20 stocks at a time. As it goes down from here, I'll buy stocks. I'll buy until it hits here. And if it starts reversing, also I'll average up. It's not just averaging down. Sometimes you have to average up as well. You average up, you average up, you average up, and then once you reach your target of the stock by the earning date, this is where I will sell covered calls. Covered calls will keep the money that I made because I know we are at resistance. So if I have 200-300 shares of Amazon at this point, I will sell covered calls on them and make sure that those covered calls will cover my pullback, because after earning, a lot of things pull back. And once Amazon pull back, those covered calls are going to be sold again. And at this point, I will benefit from the covered calls to keep the money that I made from the stock. And then once that propaganda ends after the earning, or if the earnings are so good, now they're going to take my cover, they're going to take my shares away, but I made the most out of it by making the money out of it. And now I can start a new trade and build up my position as Amazon pulled back into a new trend line. So if you do not want to do this method, which is selling puts, you just buy slowly, you accumulate slowly, like an elephant. And every time Amazon go down $1 or $2, you accumulate until you get a good average at the end. And then once you do that, leave Amazon alone, because it takes time. It takes time to build, to make money when it comes to a stock like this. Don't worry about it when it pulls back. Don't worry about any resistance. Hold it for a year and see what's going to happen. This stock in a year should be at least a $280, $300 stock. And let's just think about it for a minute. If you get like if you get money out of this, like let's say a steady uptrend from here after the split and everything else, now you were able to just sell covered calls on the stocks that you have. Just sell covered calls. Don't do anything else except just selling covered calls on Amazon for the 300-400 shares that you have. With 5% up, like let's say Amazon is right now at 100. I'm gonna sell a covered call within a week or two for maybe 129 or something. I'll get $200 for that. Now I made $200 on the side. Within another 2 weeks, you make $300. Within another 2 weeks, you make $400, and it keeps going up and up like that. And this is how you use the stocks to make money over time. It's like having a building, and that building belongs to you, and that building have apartments, like 6 apartments in that building. So one apartment is Apple, one apartment is Microsoft, one apartment is Google and NIO and whatever the stocks are that you have. And those building that you have, you can just rent it out. You can rent the apartment. You can rent the Google stocks as rentals. A lot of people talk about renting a real estate. What about renting stocks? I mean, if you own stocks, rent them out. Sell covered calls in them, and rent them out. Some people pay $200 a week Like that's better than AD&B. That's better than having real estate and selling covered calls on your assets that you own, because when you buy a stock, you own it, and now you can rent it out. You can sell it before, you can sell it for a higher price. All these things, and then people pay you rent to hold the stock for them, because your time is valuable. You're holding stock for someone, and you're taking the risk of the stock going down, of course. So you're building your covered calls over time. You're renting the stock out, rent it out, and once it hits the target, and now you have to get rid of the stock, start a new trade, buy again, and build it up again on a pullback, and keep going like that. And I think this is all I have right now. So first method and the best one is to sell the 103 put and wait until it hits that. If it hits that, the premium that you get will cover your risk to the downside for at least 95 or something. If you don't like selling puts, then buy 10 or 3 stocks at a time, and once you start seeing the stock reversing, now you can buy covered calls, or you can buy calls on that stock, or you can, and then you can just leave the stock alone. This is my method of dealing with that kind of split. And happy trading to everyone. Thank you for your time. Sorry about the long, videos and stuff. I try to put a lot of experience into these videos, but here you go. Here you have it. Thank you.